the inflation threat is, yes, most people see that inflation is going to run hot and that it's going to be north of 2% and maybe even north of 2.5 or maybe 3. I mean, people, will vary on how much they think we're going to overshoot. The Fed has already said that they're okay with an overshoot because the Fed is confident that it's only transitory. And that even if we have higher inflation as measured by, CPI for 2021, maybe even 2022, that it's going to be short-lived and we're going to be back into our sub 2% zone, right? So I think to the extent that the markets agree with the Fed that the increase in inflation is temporary, it's hard to argue that then, we should factor a temporary increase in inflation into the price of gold, right? Because, you're talking about a long-term forecast for inflation when you're moving into gold. But I think the other factor is that people still expect the Fed to fight inflation, especially if it ends up getting out of the comfort zone. I mean, maybe headline inflation does come in at 3.5, 4%. I think what everybody thinks is that, the Fed is going to have to tighten in the face of, that big overshoot, right? So I think the markets are also bracing for the fact that, maybe we're going to get more inflation than the Fed is bargaining for. And therefore, the Fed is actually going to tighten rates a lot sooner than they're now indicating because their current posture is based on inflation not getting too far above 2%, even though they haven't specifically said how high above it they're comfortable. I think the markets are trying to get ahead of that by thinking, it could be a lot more than they think. And therefore, the Fed's going to have to raise rates sooner than they're saying. They may have to start, tapering off their bond buying sooner. And so I think that's also scaring the gold market somewhat, that the Fed is not going to be as easy as the market thinks. Now, I think the market is wrong on both counts, right? I mean, I think that inflation is actually going to overshoot by a much bigger margin than pretty much anybody thinks. I don't believe that it's temporary. I believe it's the beginning of a protracted period of much greater increases in consumer prices. I mean, the Fed tries to hang its hat on the fact that the last 10 years or so, or 20 years, we haven't had a lot of inflation. And the Fed says, that means that, that's the new normal and we're never going to have it again.
Right.
I think that was the aberration. I think we're going to go back to normal. And I think there were some other factors that helped to mitigate the impact of inflation, which is the expansion of the money supply on U.S. consumer prices. I mean, one certainly was the CPI that was dramatically changed in 1998, and all of a sudden, magically, inflation disappeared after we rejiggered the CPI because we claimed that it was overstating inflation, so we had to fix it. And I think now it understates inflation. So that's part of it. But a lot of it had to do with China and their willingness to accept our dollars and exchange for their products and just buy our treasuries and supply our market with all sorts of consumer goods. So there were these, extenuating factors that I think made the lag between printing money and increasing prices longer than normal. It didn't stop it. I mean, we're going to see the impact. We're just seeing it later than we might have in the past. But so the other thing, though, that I think the markets have got wrong is not only is inflation going to be bigger than they think and not be transitory, but the Fed's willingness or even ability to do anything about it really doesn't exist. I mean, the Fed could talk all it wants about how it's going to fight inflation if it was wrong and inflation became a bigger problem. I just don't buy it. I don't think the Fed is going to do that. They can talk a tough game, right? They can bark, but they will not bite. Because think about it from a practical point of view. They've already said 2.5% inflation. That's not going to worry them, right? A little bit above, maybe 3. And they've also said they want to wait at least a year. They're not just going to look at a blip up in inflation. They want to make sure that the inflation isn't transitory before they take action. That's what Powell's already said, right? They want proof. They're just not going to look at it. They're just going to assume it's transitory unless they're proven wrong. So let's say they wait, and as they wait, the inflation just gets bigger and bigger and bigger because they didn't act preemptively. And now a year goes by and maybe inflation is 6%, 7%, and it's headed higher. And now the Fed is like, okay, we were wrong. It wasn't transitory. We got an inflation problem. Well, now they got a bigger problem in trying to solve it because now they have interest rates still at zero. What are you going to do if inflation is 5%, 6%? Move interest rates up to 25 basis points, 50 basis points? That's not going to do anything. They got to move interest rates up to maybe 8%, 9%. I mean, it's not even a possibility that they can go anywhere near that amount. They're going to have to start unloading U.S. treasuries and shrinking the balance sheet. They would create a far worse financial crisis than anything we took place in 2008 if they actually had to fight inflation because they waited too long and let it get out of hand. So my thinking is they will not fight inflation. They're going to surrender. Inflation is going to win without a fight. And so when people understand this, that inflation is going to be much greater than the Fed thinks or anybody thinks, and it's permanent, and the Fed is never going to do anything about it. There is no way to put out the fire. I mean, gold will just go ballistic when people, finally connect those dots.